All right. Hi, everyone. Welcome to this timing research special event titled Triple Three Strategies with Price Headley of BigTrends.com. And just a reminder, of course, this presentation is for educational purposes only. All trading is not suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. And this is being recorded, and it will be available as quickly as possible on the TimingResearch.com website. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you'll be able to find the recordings there as well. So I'm going to go ahead and turn it over to Price Headley.
Thank you so much, David, and good afternoon, everybody. Thrilled to be with you. David and I have known each other for some 20 years, and so it's a pleasure to be in with him to share with you things that have worked for me over 20 plus years of trading options. I've actually been trading options for 35 years, and so it's all about finding what works. And so that's my goal for you, is to share with you something that's worked for me that I think you can put to work and help you take advantage of opportunities looking forward over the next year. This is that time of year where it's a good time to kind of take stock or take option of how we did in 2024 and what our goals are. Think about what you want to accomplish in 2025. I don't want to name any names, but I'm kind of curious to know, how would you grade your success in 2024? If you're giving yourself a grade school scale, would it be an A? Would it be a middle of the road B? Would it be a satisfactory, barely C, or something worse? Just curious how you would grade your 2024 uh, as we get near the end of the year. So we got and I love honesty. We've got a D, we've got a B, we've got a C. One of the great things about the markets is it requires honesty. If you're not frank about kind of how you're going to handle not just your winners but your losers, the market will make you pay for not identifying your losers when they're small and getting rid of them, and it'll make you feel that pain. We want to say, get rid of those losers in a reasonable order, but really also how to get your money back and your risk capital back that much faster with this triple three strategy I'm going to walk you through today. So another C. Okay, so kind of middle of the road. Nobody giving themselves an A, and I can also appreciate that in the sense that even when I do well, I always want to feel like I'm green and growing, looking for more opportunities. We're going to get into that here today. Teach you some new things and a way to get your risk capital back even faster in your option trades that gives you freedom, both financially and emotionally, to let the rest of the trade run to some potential triples or more, in some cases, not all cases, but in some cases, and enough that makes it worth this whole approach really making a lot of sense in my experience. Uh, Looking back and we're going to look at a bunch of case studies. So let's just remind you, of course, as we get things started in this educational webinar, that the information shared in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. These should not be considered specific advisory recommendations here. As you know, stock and options trading have large potential rewards, but they also have large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our BigTrends.com homepage for more information here. So what I want to focus you on today is not just one objective. It's actually two things that I think everybody wants, which is, how do you get a better win rate in your options buying than what you might be used to? And also, how can you still get high reward, big gain potential on at least part of your position? We're going to create what we call a hybrid approach here, looking for both an improvement in win rate versus normal option buying, and also the chance to still let part of your trade run to something much bigger. And that's where you really get paid well as an options buyer. So we all want that theoretically unlimited upside, but we've got to manage risk. We're going to talk about risk here too. We're not just going to talk about reward. We're going to talk about how you get rid of trades that aren't doing what they're supposed to do too. We call this strategy triple three options, T3O, because we're looking for trades that can triple or more. We're also looking to get at least 3 contracts in each trade that we trade, and you'll see why as I get into this partial couple of different targets. First target to get your risk capital back even faster, and then letting the rest run. And you get trades as soon as this afternoon. We put them out in the final hour of a trading day, Monday through Thursday, when we have signals. So if you don't know me, I've been trading options for 35 years and counting. Caught the trading bug while I was a student at Duke University and realized it's what I wanted to do in my career because I just was so passionate about it. And basically now with the power of computing, everybody's talking about AI, artificial intelligence now. We've said since I launched BigTrends 25 years ago this past month, November of 99, when it started BigTrends.com, and I said, look, it's all about having a systematic, quantifiable, data-driven edge. If you don't have an edge, you should not be trading. Okay, so I'm here to share with you one of my edges that I think is effective here, and we'll show you some case studies here so you can get a picture of what this looks like. We're looking to trade off of big names like an Apple. We got a couple different Apple examples here. We got plenty of other ones too, but in this example here with Apple, this is the daily candlestick chart. You know, candles are open, high, low, close, showing you the green slash white open body bars are the positive closes versus the lower opens. The red ones are the lower close versus the open, but we don't care about any one candle. We're looking at a pattern, and the pattern here includes multiple things happening. We can't get into all the nitty gritty, but I can share with you the concept. One of the first concepts is it has to have recently just made a new high, looking back over about the last month or so. And then you say, okay, you know, we made a new high. We've also been making higher opens for not just one prior bar, but at least two prior bars. And if we see that pattern fulfilled, we can get in the final hour of that subsequent trading day. As you see in this particular case, it actually happens to be a pullback day. That's not a requirement that it goes red in an uptrend. We're not just trying to buy a dip, but we're trying to buy bigger picture, positive momentum and take advantage of it. So we get into Apple calls when the stock's trading right near 225. And if you're new to options, we're buying a 227.5 call, slightly out of the money call. Now we all know that if you know anything about options, you know that okay, if you buy something that's quote out of the money, anything at 225 or higher on a strike price means it's all time value because the stock's just under 225 when we make this recommendation. You say, oh, all time value, that's high risk, right? Well, if you are passive and you sit there and do nothing with it, yes, you could lose what you put into the trade. That's always a risk in buying options. If you get a big gap against you, then yes, you can have a problem, right? That's the case whether you buy the stock, whether you buy the wrong side of the options. But the point is that we want to reduce that risk by doing a couple different things. First things first, never overcommit your capital in any one trade. We're assuming that you have at least 5,000 bucks to trade, and you can trade up to 1,000 bucks into each new trade in these examples. Okay, so that's I think a very reasonable starter kind of an account size, something that we think is easy for a new trader to work with and not have too much exposure. In this case, if you're buying $1,000 worth of Apple calls, and that 227.5 right to own it at that price point, they're out of the money, right? The stock's got to rally for that thing to go be worth something at the expiration, which in this case the expiration is about a week and a couple days later. About maybe we put it out with about maybe 6 trading days to go before the expiration the following Friday. These are called weekly options. We'll get more into that, but the concept here is that we want to get your risk capital back much faster than ever before. And in the old days, I would say, well, if you double your money, go ahead and sell half your position. That was an easy one. Sell half at a double, you get the proverbial free trade. But we noticed this other pattern where a lot of times we can get these quick snapbacks. Apple snapped back up. It did not double the next day, but it did go up 50% on those options. And we said, well, you know what? If you do the math, if you sell 2/3 of your position or more, you get 2/3 out at a 50% gain, that gets you your risk capital back. And then you've got a 30 of your position left to let that keep running. So in this example, we got 5 contracts. We couldn't quite sell 3. That would only be 60%. So we sell 4 of the 5. 80% of our position sold out when it makes a 50% gain, which it does that next afternoon. So we're getting out that next day. We send out, by the way, on our 333 options service, we send out real-time emails as well as you can get it as a mobile phone update with clear entries and exits, never leaving you hanging. You know exactly what to do next on every trade without a whole lot, without screen watching. It's just a matter of a couple minutes to get in, a couple minutes to get out. Pretty simple instructions. But the idea here is that once you've gotten your risk capital back, in this case, you saw 4 of these contracts up 50%, you're actually in a slight positive position no matter what happens to the remainder of this trade. Because you've sold 4 contracts out at 272 bucks a piece. You invested a total of 905 bucks on the 5 contracts, 181 bucks per contract times 5. Now you're selling four of those out at 272. That gets you $1,088 back, right? So you're already up like 180 bucks. These are before commissions, but as you know, commissions are way down. 5 contracts in and out would cost you no more than 10 bucks round trip in total commission costs at most. No ticket charges anymore in options. It's a beautiful time to be an options trader compared to when I started back in 1990. But the bottom line is that, look, you look at this and say, okay, we're already in a risk-free position. You see these next couple of days, not much is happening. What we do is we say, look, on the runner piece, the remaining contractor contracts, usually we've got about a third left. In this case, we only have about 20% of our position left. We're stuck sideways for these next few days. These things are going to expire um, on August the 30th. And our rule says get out by the end of the day, or by actually 1:30 p.m. on August 29th for the 5-day rules. You count them out 5 full days after we're in the trade, right? 1, 2, 3, 4, and on the 5th day, we are done in the afternoon. Turns out we're out not far from the highs mid-afternoon, about 1:30. Later in the day, it comes back down. So at 1:30, we're out around this 232.5 area. What's a 227.5 call have to be worth at 232.5? It's got to be worth $5 intrinsically because you've got a right to buy it at 227.5. It's $5 above that. That's called intrinsic value in the money by 5 points. So we get out at $5 on the last contract. That final contract makes us 176% or more than 3 times what our first 50% gain was. And you can see that that last single contract makes you $319 from 181 to 500 and almost half of your total profit off of that final 20% of your position. So you'll see that in a lot of these cases that I'm going to share with you today, that the final runner piece, even though it's a minority of your original position, can result in the majority or a big part of your trading profit. So in this case, you make $683 for a total of 5 days in the trade. So, but the key is that in the first 24 hours after we got in on that first entry point on the circle back here, you can see the very next day, day one, the full day one, we were already out of most of our position and had a risk-free trade. Because think about it, if you've gotten your risk capital back, even if the remaining contracts go to zilch, nada, nothing, that you're like, okay, you know what? I can't lose. So what that does is it frees you, not just financially, but psychologically, to keep letting the trade run. And we give it that 5 trading days on the runners, whether it had a good day or a bad day, day 1, 2, 3, or 4. So the average holding period on these will be about a week when they're working or less. We're going to use this simple next week options. Is going to be all these big name stocks have weekly options going out multiple Fridays ahead. Every Friday is a weekly options expiration for the stock market, the individual stock weekly options. We're looking at these price action patterns too to say momentum is building, in this case to the upside. We weren't early on Apple. We just caught a piece of that uptrend. We can get up to 10 new trades a month. We tend to tell subscribers expect about 2 trades a week or about 8 trades a month, but we can have a little bit more from time to time. Your win rate's going to improve because when you sell half or 2/3 of your position, in this case at a 50% gain, to get your original risk capital back in your pocket, that won't be able to happen every time. There's going to be losing trades where we can't get that. And we'll talk about stops here too in a little bit. But the idea is that, look, if we get that break even on the first 2/3, unless the other remainder runner position goes to zero, whatever you can salvage on your last part of your trade is going to basically work out to be your profit once you've gotten to a risk-free position on the first 2/3. So give or take, that's going to be where you really get paid, is on the runner piece. But even if the runner piece is down uh, by some amount, if you can salvage some value out of it, you still have a winning trade. So that will improve your win rate versus buying and hoping, right? And hope is not a strategy. We don't want to ride the slope of hope. We want to focus on book them, Dano, take the money when we can get the risk capital back into your account. Let's take that and then let's try to let the rest of it run. So we're focused on both quantity, but also on quality, right? Quality's got to be there. And the quality for us comes from, well, we can never guarantee the future. Future results are going to vary. What we can tell you is if we look at the past history on the stock and it's got a very positive 10-year profit factor, in our experience, that's going to be something that you can really benefit from looking forward. Because I believe stocks are a lot like people. They've got either stable, fairly consistent personalities, or they've got erratic personalities. We try to stay away from the erratic ones and go with the ones that have had a more stable 10-year profit factor history that's very tradable. Trades can get entered between a Monday and a Thursday afternoon in that final 30 to 45 minutes of a trading day. So you look at it and say, why do we do that? Because we're waiting for the daily chart to truly be confirmed. And in the final 30 or 45 minutes, we're pretty close to the end of the trading day. And that still gives you enough time to act before the 4 o'clock New York Wall Street bell rings. We can have up to 4 trades open at any one time together, not more than that at one time. And then we'll exit after 5 trading days. On the 5th full day, it will be out at 1:30 p.m. before the close, just to give some wiggle room and not have you holding too close into the end of the day on that day 5. So you look at this and say, why should you care? When you look at the performance since inception, this includes all winners and losers that we called out for our 333 option subscribers going back to the beginning of last year. So almost a 2-year track record now has nearly tripled, right? You can see that we've got a $5,000 account that ended up making $9,452 in gross profit. So that's a $5,000 account grew to $14,452 gross. These examples are gross before commissions, before subscription investment. The beauty of this is it assumes that you never compounded your amount you invested into each trade. A lot of services will show you like compounded results to try to show it even bigger. The problem I have with compounded results is that you start leveraging up what you want to commit after a run up, and invariably you'll have too much money allocated during the next drawdown, right? You've got to always manage for both upside and downside and keep on executing consistently. So that consistent, stable capital allocation over time has actually helped us to continue to manage drawdown risk well. Remember, past performance never guarantees future results. Future results will vary, but what will not vary is our consistency of following this system. So let's talk about this setup pattern. We're looking for at least 2 consecutive gaps in our direction that we want to trade. So we're trading the upside. We need to see that we've been having 2 straight gaps in a row, and that we just have recently hit a new high in the case of a bullish call purchase. If it's bearish, it's the other way, right? We've seen 2 gap downs in a row, and we just recently tagged a new low looking back over the past month or so. Now you look at this and you say, okay, we'll also filter some of our bear trades to put purchases out if they're not below a key simple moving average. And then we look at that historical profit factor for the bull trades, the call trades, or for the bear or put trades to make sure that history supports that we should be taking that trade over a large sample of trades, right? And so, while the exact sites are proprietary, you learn them when you become a subscriber. But we're going to talk more about how we get in Monday through Thursday. We don't take trades on Fridays because the 5-day time stop would have us exiting on the next Friday's expiration, which would be cutting a little too close to the end of that option's life. We want to give you a little bit of wiggle room to still be able to act and not sweat it too close to the expiration. We're looking for the next Friday expiration, the next week's weekly options. And look at this. The options that we're going to buy have to be priced at $333. That's $333 per contract controlling 100 shares, which means that if you're investing $1,000, you know you're going to get at least 3 contracts. We need the 3 contracts to be able to sell 2/3 of them or more if needed. If it's not quite divisible by 3, we'll show you some different examples here. We use ATR, which is called the average true range. That's just a volatility measure looking at each stock's recent highs and lows to tell us about how much that stock tends to move. We'll look at the set it, forget it stops and targets. You know, okay, what we're targeting is a 50% gain on the first piece, first 2/3 of the position, and then the runner over the next 5 days. We'll use a 50% stop loss if it's not going to fire. We'll show you an example of that in a little bit too. So point being that we've got more upside on trades that can go on to many hundreds of percent on the remainder of the position. As you can see here, we want to get at least the 3 contracts, right? So we can sell 2/3 of that first 50% target. So for example, if you say, well, if I'm going to buy 3 contracts, they're trading currently at $3 or $300 to control each 100 shares per option contract, then I can buy on $1,000 invested, I can get 3 contracts. I'm going to be in for a total of $900. That 900 goes up 50%. It's now worth $1,350. You're up $450 in profit, up 50%, right? Well, you can sell 2 of your 3 contracts at $450 a piece when it's up from 300 to 450, up 50%. Selling 2 of those at 450 each gets you your original 900 back into your trading account. So now you still have a contract left over. That final third is your runner piece that you can run for the 5 days once you've gotten your risk capital back. So this gets you your risk capital back faster than waiting for a double that may or may not come, may or may not happen, right? The smaller your target profit, the better. Obviously, if you could theoretically take off at a less than a 50% gain, but then you'd have to take off even more of your position. And we find this is really easier to allow even small account traders to trade a fairly easy starter, several contracts at a time, and let the system prove it to you, not just taking my word for it. I like to have you see the system in action. Talk about how you can take advantage of a great special at the end of the presentation here. But let's look at an example of a typical name that I love to trade, which is Philip Morris, EM, the tobacco giant. You think about this and you say, well, why aren't you just focusing on tech stocks? Because tech stocks are expected to move, and so you're going to pay up for the tech stocks comparatively, right? In this case, we're buying the Philip Morris calls as the stock breaks out in that final hour. Stock's trading about 109 and a half. We're buying about a percent and a half out of the money, buying the 111 strike calls. We're paying 80 cents, just $80 a contract, less than 1% of the stock value for about a percent out of the money, with about, in this case, you can see about a total of 8 trading days to go before the expiration. We're not going to take it that far into the expiration. We're just going to hold it for the 5 full days after we get our first target, which is hit the next day as it pops up to test the old highs here near 111 or just over. We're getting out at 50% gain. $80 a contract went to $120 a contract. We bought 12 of those to get in. So we sell 2/3 of the 12 is selling 8 of the 12, 2/3 of our position out at a 50% gain. As you can see, 12 times 80 cents is the same as 8 times a buck 20 in terms of $960 in, $960 back out. And now you still up 50%, have 4 contracts remaining at that currently valued $120 a contract. Why don't we take them all out? Because of this runner effect, you can see that the remaining 4 contracts keep on going. You can see it's just a steady channel higher over the next 4 days after the first full day in the trade. On the 5th day, it got almost to 115, 114.8. These would have been worth at 115, they'd be worth almost $4. You can see, well, we got up out at 340, pretty close to that high, and made 325% on the final third, the final runner piece. Each of those contracts, 4 contracts, each one of those from $80 a contract entry to 340 exit, made $260 of profit per contract. 260 times 4, $1,040 on just the last third of the position. That was the vast majority of our total profit in the trade. Total profit in the trade was $1,360 before the commission, at $12 on the way in, $12 total on the way out. So you can see you keep the vast majority of what you make. It's a great thing in terms of how much options have come down. Here's one of our best trades here in 2024 is in another Apple example. This is back in June when Apple was announcing their version of AI. They called it Apple Intelligence, and the stock went ballistic on that news. You can see that it had been starting to trend up. We'd had a series of higher highs working here over those past 3 to 5 days. And even though it ends up closing a little bit lower that day, we're saying don't panic on one red candle. Our system says you should buy the prior couple of gaps up or strong. This is one we want to own. It turns out to be a great entry point that afternoon before it rips to the upside the next couple of days. Of course, our rule though is 5 days, right? So day 5 is happening here. Day 5's close is up around 217. We end up getting out about 130 that 5th day, around 218 or so. And look at what our option contract, we had the 195 call entered at 222. So we're able to get 4 of those contracts for $888 invested. 3 of the 4, and the 75% of the position sold at up a 50% gain, 222 to 333. That's $111 profit on 3 contracts, $333 gained on those 3, right? That's nice, but you can see, look what the last contract did. One single measly contract went from $222 to $2,295, over more than $2,000, and the vast majority of the profit off of just the last contract, right? Because you own a right to own the stock at 195. It's gone from, you can see, 194 to now 218. An amazing move, right? 24-point move, more than 10%, maybe like a 12% move in the stock over 5 days. This is on Apple, the biggest stock out there, right? Apple and Nvidia, the 2 biggest. But you can see that's a 933% gain, a 10-bagger on your last contract, results in that massive profit overall, even for just one final contract remaining. So it just shows you how powerful it can be, and we let the 5-day rule play out, and it played out really nicely. Those are bullish call trades, but let's also show you a bearish put trade Here's one we had on Wells Fargo. So you can see the same kind of pattern in reverse. Now we're seeing it's making a new low here. It's had some down opens versus where it was the prior day. You can see these down opens here, and you see not by much on that one, but you can see close enough. And we're getting into the stock around 43 3/4. We're buying the 43.5, slightly out of the money, just below the market strike put. So a put, remember, is a right to sell the stock at that strike price. You can see here we get into 15 of those contracts at just 65 bucks a piece. We sell 2/3 of them on the gap down. The next day it gaps more than we expect. We make more than our 50% target. We're already in a guaranteed profit position after booking the first 2/3 out, up 86%. And as you can see, the last 5 of our 15 contracts, the last third of our position, goes a little lower, then kind of comes back up and ends up getting us out at 75%, even a slight hair below where we got out of our first 2/3. So that's the beauty of selling part of your trade and then giving a chance to run. If it doesn't run, you're still in a great position to go ahead and take the risk off the table and go ahead and still book a really healthy profit there of about 75 to 80%. So in this case, even if that final third reverses, it can generate a healthy profit. Here's an example with Delta where we got out on a bullish run up. We got in here. It ran the next couple of days to give us our 50% profit. See a $1.07 on the option turn into $1.61 2 days later, up 50%. And you can see here that the last piece as it came back down was about a break even. Right. So when you say, oh man, you let a 50% profit slip away. Well, we didn't because we sold 2/3 of it out at 50%, right? The majority is already locked in. And then we still end up making 327 bucks on that trade. And then if we can't take off exactly 2/3, we'll certainly round up. You can see a Microsoft example here where we hopped in, stock's about 427. It pops up the next day and gives us a chance on 3/4 of our position. 4 contracts in at 250. 250 goes to 375, up 50%. We sell 3 of the 4. That's a guaranteed profit already on that trade. And then look what happens. It tanks. The last contract is basically a wipeout. We get back $10 of our original 250. You say, oh man, that's terrible. Guess what? We still made $135 on the trade for a trade that totally went the wrong way by the time it was done. If we had held it all the way, we'd be down 960 bucks. That would not be good, right? We're up 135 bucks. Huge turn of events and improving, turning what could be losers into winners in your options buying portfolio. Not every trade's going to win. Like we said, we take a 50% loss. If it doesn't get to the first target, we've got a 50% loss trailing. In this case, Bank America calls. You see popped up a little bit, then knocked down on day 3 and stopped us out down 52.6%. How does that happen? Because we don't have a ton of time, right? We've got a week to 2 weeks max on these trades before expiration. It's at 38 cents a contract, went to 18 cents, cut in half. We take the $520 loss. It happens. So the key, though, is that you free yourself by taking the first 2/3 or more off at a guaranteed break even at worst, and that frees you to let the rest of the trade run. Here's a Wells Fargo call example where it just ran like crazy. You can see these options were cheap. 45.5 call is just slightly out of the money. We're buying it just over 45 on the stock, buying the 45.5 calls. Paid 59 cents a contract. The very next day, it pops to 46, and they're worth 89 cents for a 50.8% gain. So we got 16 contracts in. We get out of 11 of those. Got a small profit guaranteed, and then we've got 5 contracts left. Look at how we go from the 89-cent first target to $4.85. We only paid 59 cents. Look at the leverage here as it rips all the way up here to 50.5. These things are worth almost $5 intrinsically. We're out at 485, up 722% on 5 full contracts. Each of those contracts good for more than $400 of profit, more than 2,000 bucks on our runner piece of profit, the majority of the profit in the runner, right? So give yourself a chance to let the rest of the trade run. So we send our subscribers real-time trade alerts when it signals a fresh new entry, or if we've got to get out, we'll tell you how to get out too. So here's how you can get them with 333 options. 333 options, normally if you buy it on my website at BigTrends.com, 12 months of trade alerts each month would typically cost you $297 a month. I'm going to give you extreme value here, plus a whole lot of educational support to go with it. I give you weekly video training. I give you the strategy session video, how to watch and follow along, and then settings and rule sheet, knowing exactly the parameters for the system. And if you've ever got a question, this is almost invaluable or priceless. Actually, I'm on that list, so I'm part of it. But bottom line is that we get you a dedicated email to my research team and myself. If you've got a question, you'll get it answered. $297 a month times 12, $3,500 plus value. Today, slash that, you're going to say, I'm going to take it down. First best price I would typically take it down to is about 80% off, take it down to about $797 to give you an instant discount. But because you're a Timing Research member, and as my thank you to David for allowing me to share this with you today, I'm going to save you an extra $500 off, which takes it all the way down. If you act today only, this is a flash sale, $297. Remember, I said a month is usually $297. This is like buying 1 month and getting 11 more months for free. An 11 bagger of extra value in that sense. Well, you see, I'm only going to allow this for the first 22 spots. It's way too low of a price point. I showed you how any one trade could potentially make you a couple $1,000 if it hits the bigger runner objective. Like Apple made $2,400 on that last one I showed you. Wells Fargo also over $2,000. So you can see super powerful opportunities. And here's where you go. You need to go here right now to go ahead and lock it in. It's TimingResearch.com. Thanks, David, for helping set this up. TimingResearch.com /BigTrends. Of course, BigTrends is the name of my company, but TimingResearch.com /BigTrends. David helped set this up so you can take advantage of it. And it's really a phenomenal value. Now, this is cool. David actually gave us a QR code where you can actually scan this with your phone and it'll already pop that order page up for you. You don't have to type it in. You just have to scan, hover over that black and white QR code image with your camera on your phone, and it'll pop up a link. You can hit that link, and it'll pop you right to the order page, the TimingResearch.com /BigTrends order page. Because it's way too low of a price point, I'm only going to keep it out there till midnight tonight or until the first 22 spots are taken. Okay, because I do want to make sure that, of course, we don't have too many people ever getting in at any one time to my trades. It's very, very active names, so I don't worry at all about how many. We can move thousands of contracts in and out very easily without even a hiccup because of the nature of these very active names. Like I showed you, Apple, Wells Fargo, Delta, so many big names that have tons of options volume as well. So you go to that link, TimingResearch.com /BigTrends. If that wasn't already enough, David also offered to throw in an extra bonus if you're one of the first 22 to act here before midnight. He's going to include also his stock watch list weekly newsletter that gives you at least 3 new watch list ideas every Sunday to get you ready for each new trading week. He'll send them out to you, and you can see they're active names, highly liquid, share price above $3, so not penny stocks. But ones that have good leverage, good potential for growth based on high probability technical analysis patterns as well. So that's just an extra bonus. You get that extra $100 retail bonus for the stock watch list weekly as an extra bonus free when you act at the TimingResearch.com /BigTrends. Now, when you go to that page, by the way, we keep the order pages really simple. I'm a big believer in the KISS principle. You can see exactly what this looks like. It looks like this. You see, you've got this is a secure page. Of course, like we said, we're now in our 26th year serving our BigTrends community. And it's always been about making sure that your information is kept secure, private to you, and basically making sure that you can place your orders with confidence. That's an HTTPS secure page. You can put your payment info in here. Just make sure when you get it in over here in the billing information, you get your email in there. And you make sure it's accurate, because bottom line is that you want to make sure that you get your welcome information. We'll get you member site access with all the other bonuses educationally as well, like the rule sheet, like the video training I do every week for my subscribers, and teaching you new things about how to learn how to do this if you want to along the way, but certainly understanding the reasoning behind every one of our trades as part of that educational process. We've already taken all discounts. Like I said, that should be a $297 a month times 12 would be a $3,500 plus value. you're getting it today for the equivalent of the normal 1 month rate of 297, and I'm throwing the equivalent of 11 more bonus months behind that to give you 12 months for the price of one. Okay, that's insane. No other promo code discounts can be applied because this is insanely low. And don't forget with David's Stock Watch weekly several picks a week on that too. You're getting that as an extra bonus too. So all you do is you review the terms and conditions. They're spelled out here. You see, you can complete your purchase if you put your credit card information on that page, or you can go ahead and click the PayPal link. It's how I do a lot of my online transactions. Just click PayPal, log into PayPal from that. After that link, click your money source, how you want to pay, and then boom, you've locked in one-time investment of only $297. There will be no future auto billing charge. It's just boom, all in. $297 locks in a full 12-month subscription to Triple Three Options with not just the email alerts, with not just the mobile phone updates as an extra backup to make sure you never miss an entry or an exit instruction, but also ongoing education. We call it learn while you earn. Now, if you've got any questions as well as you're getting your order in and being one of the first 22, don't get caught napping on this, folks. You need to act today. After today, it's gone for sure. So give us a call toll free at our 1-800-BIG-TRENDS line. That's 800-244-8736. Or you can email my client care team, customer service team via clientcare@bigtrends.com with any questions you might have about getting your order in, making sure you were one of the first 22, not missing out on loads of opportunities to come over the next year. This is going to take you all the way until this same date next year in mid-December 2025. So you're covering yourself for the vast majority of 2025 as well as the finish to this year. So bottom line is that you're going to see, think about that. Over 12 months, we said about 8 trades a month. It's about 96 trades over the course of the next year, give or take. So we're saying we expect you to be looking at an average cost per trade of around $3 a trade, if you think of it that way. It's pretty insane the kind of value that this offer entails. I think it's exactly why BigTrends has been around for 25 now, on our 26th year and counting, having served so many folks over all these years with great value to go with your subscription investment and great education too. Always teaching you what we're looking at. It's not a black box. You'll learn a whole lot from this. So, like I said, you want to go there to that special link right here. It's TimingResearch.com/BigTrends. Now remember, talked about what you invest 297. What could you expect out of that? Well, like we said, you can expect potentially the chance to see a trade that could go up and make you $1,000 plus in profit in one single trade. So you can already get a massive ROI of triple or more when one trade gets to its target objectives, like the number I've showed you today. What type of strategy? Simple buying of a call or a put. What are the recommended prices? Never more than $3.33 a contract, meaning if you're putting $1,000 in per trade, that means you can always get at least 3 contracts, if not more, on each new trade. When are the new trades sent? Mondays through Thursdays between 3 p.m. and 3:30 p.m. Eastern Time, the last 30 to 60 minutes of trading day. I didn't mention this earlier, but there are no day trades in this system. Since we're getting in right near the close, usually the earliest we can get out at the first 50% profit target is the next morning. So you don't have to sweat day trades with this system either. How we get the trade alerts, we'll send them to you real time via email, and then you can also get instructions on how do you set up the WhatsApp access through your mobile phone as well. No additional charge from us. How many trades will you receive? Up to 10 new trades per month. Typically, I'd expect about 8 a month on average. What's the maximum number of open positions? Never more than 4 open trades at once. The time stops meaning we'll never hold a trade more than the 5 trading days after we got in. And so this really keeps things simple. All you have to do is go to that link right here, TimingResearch.com/BigTrends. So you join now, you get the Triple Three Options alerts, you get the continuing education, and you get David's Stock Watch weekly newsletter as well, where you're getting at least 3 new stock trades sent out to you every Sunday afternoon to be ready for the next trading week ahead as well. So a reminder what one trade can do for you, right? The Apple one was our biggest one here in 2024. So definitely know that it's an outlier. Know that we showed you other outliers too, like Wells Fargo up 700%. We showed you other examples are up 300 and 400% on their final runner piece. But the key here is that, hey, you get that runner, whether it goes up double, triple, quadruple, in this case, 10x, 10 bagger on the remaining piece of your position, resulted in your original $888 investment turning into a $2,400 gross profit And you can see, of course, round trip commissions would have been no more than $8. 4 contracts in, 4 contracts out. So we don't ever try to complicate anything. We don't try to repair anything. We don't try to roll any positions. We keep it simple. When the option we bought, that's the same option we're going to sell to close when the time is right to get out. So with today's special package, like I said, normally a month would cost you $297, but with all the discounts, we're taking the 12-month special down from $3,500 retail value to only 297. We're talking about some 90+% off. Okay. So it's really extreme value here where you're locking this in. But that's why I'm not going to keep it out there very long. I'm going to make it expire after midnight tonight, and we're only putting out 22 of those spots. So you need to go there now to lock it down. Remember too that you can use your phone with your camera, highlight that QR code, and pop a link off that QR code as well at the TimingResearch.com/BigTrends. It'll pop that same link for you off if you scan the QR code, or you can just type it in on your browser, TimingResearch.com/BigTrends. I appreciate David posting it there as well. I see he's posted it for you too, so you can click on the text webinar chat box as well. So remember, you're getting not just a bunch of trade alerts and follow-ups from us on when to get in, when to get out. We never leave you hanging, but you're also getting all kinds of extra bonuses. Remember, you're getting the stock watch list, you're getting the all the training, all the other goodies as well. You can see as I go backwards there, just to remind you, there's that stock watch list weekly bonus and so much more here. So you can see, lock it in now. You want to go there, TimingResearch.com/BigTrends. The bottom line is that you say, okay, what is the outlook for the markets? I think it's going to be very much of continue to be a momentum driven market for quite a long time to come. Let's face it, there's going to be a lot of news flow. Whether you like the news or not, the key is, can you align yourself with it? Line yourself up in the direction of the trend. That's what we're doing with this system. We're looking for that momentum that's been positive. We're never going to call tops and bottoms. We're going to look to catch a sweet spot, a piece of that trend in the middle of that move. It gives you the chance to take it to a risk-free trade quickly, and then now frees you to let the rest of your trade run. So this is a game changer, folks, when it comes to a whole new psychology. You don't have to sweat your winning trade turning into a losing trade when you've already booked the first 2/3 out of the 50% gain. Bam, you have the free trade. No sweat. You're going to sleep really well with this, and you're going to also know that we're supporting you anytime you got a question. We're here to answer any questions you've got, and then never leave you hanging. Always tell you when to get in, get out, win, lose, or draw. We'll help you clean it up, moving on, look for the next opportunity. So thanks for being with me today. I'm going to go ahead and hand it back over to David to wrap it up. But just remember, go to that link right now. It's on that QR code, or you can just go to TimingResearch.com/BigTrends. Lock in this more than 90% off value. Remember, I said it's like buying a month and getting the other 11 months free, right? It's like 12 months for the price of one, just $297. One-time chance to do it today only. It expires at midnight. Be one of the first 22 to lock it in before they're gone. They will go fast. Thanks again, David, for having me. It's been a pleasure, and I hope you enjoyed it, folks. Look forward to seeing you again real soon. And trade well, and wish you a very happy holidays, and looking forward to a very happy and prosperous new year with this phenomenal 12-month special, just $297 if you act today. Back to you, David.
Yeah, I was just while you're talking, I was thinking about the year ahead and everything going on in the world. Do we think there's going to be a little volatility in the markets?
I'd say we're going to expect plenty of volatility.
I think
Exactly, and
there's a pretty
that's a
good chance of that. So
yeah, and it's a beautiful thing to look at, kind of the two-part strategy we're talking about here. So many other uh, trading approaches are kind of all or nothing. They're like, I'm all in on whatever the stock is, or I'm all out on it. And here you're saying, look, no, just give me a chance to get to my risk-free position on the first 2/3, only keeping a third of my position on. And a number of cases we talked about here, the Apple example, that last contract made 2 grand on one simple contract. So it's one of those things where it's like, even if it makes 1,000 on that last few contracts, even if it makes 500 on the last few contracts, that's like your gravy. That's like where you give yourself a chance to truly let the trend be your best friend. So many people are fighting trends, or like getting out too early, kicking themselves that they didn't get enough of the move. This gives you that confidence and that staying power to stay with your best ideas. And in this case, our best ideas, we're going to help you have a lot more of those quality ideas, and also know how to kick out the other ones, move them on if they're not doing what we want, and keep you focused on the best of the best.
Mhm. Yeah, sounds good. So yeah, anyone who makes this small investment in their trading future will have the rest of this year and almost the entirety of 2025 be set for options trades. So
Can't wait.
yeah,
I'm really excited about the year ahead and look forward
yeah,
to so many of you taking advantage of this and being on board for a great year ahead as well. Thank you, David, as well, and wish you a happy new year to you and yours.
yeah. Happy New Year to you too, and to everyone listening. So this has been Price Headley of BigTrends.com. So be sure to go to TimingResearch.com/BigTrends and check out this offer. All right. Thanks, everyone. Thanks, Price.